Imagine an asset that can swing 5 to 10% in a single day. That is the daily reality of natural gas, traded as XNGUSD. Many Forex traders treat XNGUSD like another fiat currency pair. They try to apply standard technical setups and wait for central bank announcements, a strategy that often results in their accounts being wiped out when the market moves against them. Natural gas moves to the rhythm of physical reality. The price is dictated by tangible supply and demand metrics, massive storage reserves, pipeline infrastructure, and shifting weather systems. To navigate this market, we have to strip away the noise. We need to deconstruct the chaos into manageable layers and build a specialized, rule-based trading framework. This approach requires setting aside common Forex assumptions and leaning into the specific physical logic of energy commodities. The foundation of this system is the constant tug-of-war between supply and demand. Every Thursday, the U.S. Energy Information Administration releases its weekly storage report. This data reveals the specific volume of gas added or removed from the grid, often acting as a trigger for significant price action. Weather forecasts are the primary drivers of that demand. A colder than expected winter forces massive gas consumption for heating, which can put immediate upward pressure on prices. On the supply side, an unexpected pipeline shutdown or political instability in a major producing region restricts the physical flow, creating a sudden imbalance in the global market. Layer 2 is seasonality. Historical data shows predictable cycles of demand. Consumption typically rises during the winter heating months of October through February, with a secondary peak in July and August for air conditioning. Between those peaks are the spring and fall shoulder seasons, where lower demand causes prices to consolidate into ranges. We can measure when these quieter periods are likely to end. By applying Bollinger Bands to the chart, we look for a squeeze where the bands contract tightly around the price, signaling that a new phase of volatility may be approaching. By combining physical supply data with these seasonal maps, you can identify the specific windows where the market is most susceptible to a breakout. Now, the next step is tactical execution. This 1-hour chart shows a tight consolidation box right before a Thursday EIA report. To capture the move, we use a breakout tactic, placing pending buy and sell stop orders outside that range. When the data drops, the price often breaks with speed. Once the top order triggers, immediately cancel the opposite order to avoid a reversal. During quieter shoulder seasons, the tactic shifts to range trading. Traders look to buy near established support floors, like the $2.50 mark, and sell at known resistance ceilings. For longer-term shifts, such as an incoming cold snack, you use swing trading. Rather than buying at the top of a new spike, you wait for the price to pull back to a daily moving average to establish a position with a better risk profile. But because natural gas CFDs use leverage, a standard static stop-loss is often too narrow to survive the asset's normal price noise. The solution is a dynamic stop-loss. By using the average true range, or ATR, you can set your stop-loss distance based on current market volatility. This gives the trade room to breathe while you adjust your position size to keep your total dollar risk constant. Strategic execution and dynamic risk management are interdependent. Without an ATR-based shield, even a strong seasonal setup can lead to a margin call. A high-probability trade setup occurs when these layers align, such as a technical bounce off daily support during a seasonally bullish month with a cold weather forecast on the horizon. This confluence allows you to move away from reacting to price spikes and toward executing a proactive trading thesis. Looking at the macro horizon, natural gas is increasingly positioned as a bridge fuel, cleaner than coal or oil, making it a central component of the global energy transition. The rising global demand for LNG exports creates a structural foundation for market activity, suggesting that high volatility and trading opportunities will remain a feature of this market for years to come. Start building your trading system. Open an FXNX demo account to practice these XNGUSD strategies risk-free, using advanced charting tools and real-time data to develop your edge.